Hi, I'm Shelley Kraft, and welcome to SNNLive. We're at the Cambridge House International World Resource Investment Conference, and we're in 2013 summer in Vancouver. I have with me John Kaiser of Kaiser Research Online, a speaker, newsletter writer, and someone who people stand around and want to listen to. John, welcome to SNNLive.
Shelley, it's great to be here.
So let's talk about what you talked about when you spoke.
Well, we're in probably one of the worst bear markets for the junior resource sector in a long time. The smackdown that gold suffered in April was sort of like the straw that broke the camel's back. We've been in a downtrend since Q2 of 2011, and now we're suffering a capitulation type washout. And until there is a turnaround in gold and ultimately base metals, which we won't see base metals anytime soon, but gold we could see sooner, or some big discovery that gets everybody excited about a little 15-center going to $5-10 because they made something very big come out of nothing. We're in a bit of a morass right now.
So what do you do?
Well, I do something called extreme bottom fishing. I sift through the debris and I look for those companies whose management team is still alive, who have money in the treasury, who are actually daring to drill something. And in fact, that's very interesting criteria. Anybody who now has no bullets left and is willing to fire the bullet, knowing the bullet factory is closed, they obviously have a good target. So now I'm looking around to see who's actually still doing something that could deliver that exciting new discovery that, like Colorado Resources, which is the talk of this conference right now, delivered 15 cents to $1.50 and could be still significantly higher if expectations are fulfilled by further drilling.
So what happened at Colorado, for instance? What was so extremely positive to make that stock do such a big move in such a short period of time?
Well, it was a classic bottom fish, not too much stock out, 50 million shares, trading at 15 cents, $7.5 million still in the treasury, projects in the Yukon that hadn't yet delivered a discovery. They drilled one in British Columbia after doing some follow-up work last year on a showing found 10 years ago, and they pulled a discovery hole whose grade was double what we normally expect for these type of copper-gold porphyry systems. And because of its proximity to one called Red Chris that is at the has had a feasibility study done on it and is supposed to go into production, they're saying, wow, this could be like the deeper, higher grade portion of Red Chris, but at surface, open pittable. So now we're seeing the step out drilling happen and everybody's got their fingers crossed and they're speculating, what does the mineralization look like? What copper gold will it run? Did they get lucky on the first hole and everything else is going to be more mediocre? Or do we have a monster on our hands that's going to take the stock substantially higher than the tenfold increase we've already had?
So that's a classic case of it really doesn't matter what the price of gold is today.
Exactly. If gold goes sideways for the next 6 to 18 months, the ounce in the ground type deposits, they're going to be a hard sell because costs are high. They're higher than what the feasibility studies indicated because those are already obsolete, and the market's plugging in current prices or even lower prices. But a discovery doesn't count as such unless it has a grade and size potential that works at current gold prices and even lower ones. If it isn't of that nature, it's simply encouraging and no cigar for encouraging results.
So tell me, what does one find when they sign up for your research report?
Well, they have a search engine where they can sift through all 1,800 companies and find those that still have money, that insiders still own shares, have projects that are at the drilling stage. And they can also find my own recommendations because I use the search engine myself. I'm a super user of it and I'm constantly sifting through it, looking for those overlooked diamonds in the rough, which is now a huge wasteland. And there's 1,300 companies trading below 20 cents and 700 of them have less than $200,000. So the search engine's actually critical to avoid all those who are going nowhere.
So what's going to happen to those companies that have less than 200,000? Are they going to lose their stock listings? Are they going to go by the wayside? Are they going to be leftover shells of companies?
Well, some of them, which are pretend exploration companies and realize the game has changed, they're just going to not file their financials, get suspended, hand in the keys, and walk away. Others will undertake a rollback, a stock consolidation or reverse split in other parlance, and then they'll let the stock go down again. They'll go into hibernation, and when they smell that sea change in market sentiment, then they'll do a cheap private placement and reload themselves and hope to piggyback on an updraft in the market. The sad ones are those who are the real companies who have real projects, and there are big-time predators now walking around making loan-to-own type proposals to keep them alive, and their goal is to steal their assets and shift them into the private sector, and when the market has turned around, put those projects back into a public listing and run with it. That's sort of the predicament for those companies with no money, unless they can find a sugar daddy investor who believes in the fundamentals of the story, puts up money, and then encourages others to put up money to keep the team and their vision alive.
Isn't this called the shakeout that's necessary in a business that comes to this type of cycle in the market?
Yes, it's a wonderful thing, except when it happens to my stocks.
Ladies and gentlemen, I'm going to end this interview on that fine note. This is John Kaiser of Kaiser Research Online. Let's get your website, John.
KaiserBottomfish.com, no hyphen.
And he is a speaker and a newsletter writer and a welcome guest on SNNLive. We're at the Cambridge House International World Resource Investment Conference, summer 2013 in Vancouver. I'm Shelley Kraft. We're on SNNLive. John, I want to thank you for coming on. It's good to see you.
Thank you, Shelley.